Hey guys, sorry I've been gone for the last few days. I promise golf season is almost over with, so I'll be gone this Monday and next Monday as well. But hopefully you've taken something out of the first two sections of our credit unit. Again, the first section was all about how time affects the amount of interest that we are going to pay. So we did that on the mortgage assignment. So you saw the amount of interest that you pay over 15 years is far less than the amount of interest that you're going to pay over a 30-year mortgage. Again, same thing if you're transferring that to a car loan or to a personal loan or to a credit card loan. The quicker that you pay off those debts, the less interest you will pay. In the second section, we talked a lot about credit cards and balance transfer fees and APR, which is annual percentage rate, which is the interest rate that you will pay. On average for credit cards, you're looking at about 18%. And there are a lot of other fees that are associated with credit cards. We will discuss those again on Wednesday. I will be there on Wednesday and we'll talk about those. But again, it is very, very expensive if you are not paying your debts on your credit cards in full every month. A huge advantage of using a credit card: if you pay your debt, you pay your credit card bill on time in full, it will cost you nothing at all to use those credit cards, and you will just reap the rewards of the credit cards, all those advantages, without having to pay any of those disadvantages. So today we talk about credit laws, state and federal regulation of credit. There is something called the usury law, which is a law that restricts the amount of interest that can be charged for credit. That is based on what state that you live in. Okay, the organization that actually monitors this usury law is the Federal Trade Commission, the FTC, and that agency enforces the credit laws. So if we wanted to look at some of those things, so again, usury limits vary by loan amount, by loan type, and who is issuing that. So what institution is issuing that by state. Some states have different laws for different loan types. If you look at the usury laws for the United States, we'll see here in Kansas, we're looking right around 21%. For credit cards, they can go up to 29.99%. So for different loan types, they have different limits. As you see down at the bottom, 50% is used as a placeholder for some states with no interest rate limit. So if we hop over to Arizona, we'll see 50%. So they actually don't have an interest rate limit that is attached to their state, which is kind of terrifying. 50% in Oklahoma. We have Arkansas over here with 50%, but then you come down to Texas and there's an interest rate limit around 10%. Okay, Florida is going to protect a little bit closer to 18%, which is where we are. California is over here at 10%. So it all depends on the government regulation, which is so much that has to do with business, because different state regulations have so much to do with the way that interest rates are affected, or just business in general is affected. So if we go back here, your APR, or annual percentage rate, your interest rate, APR is interest rate, you must, as a creditor, remember, creditor is the person that issues the credit, who lets somebody borrow the money. The debtor is the person that actually borrows the money. The debtor has to be aware of the APR so that we can compare interest rates. So if I go to Wells Fargo and I go for a home loan, they have to tell me what rate I am approved for. And then I can go to Bank of America and I can see if I'm approved there. And, oh, maybe that's a lower rate. And then I can go to Commerce Bank. And then I can go to Federal Credit Union or whatever, and I can compare those interest rates. So the APR has to be listed, it has to be told. Again, that's based upon your credit score, so you actually have to apply to get that rate, but they have to tell you what it is. Okay, they have to tell you what the total finance charges are. They have to tell you what type of fees are included for that loan type. They have to tell you if there is an early payoff penalty. They have to tell you if there's a late penalty, how many days until you go into default, so on and so forth. All those terms and conditions must be listed. They must tell you what those are, or else they are in violation of the Consumer Credit Protection Act. There are 3 credit bureaus. When they run your credit, they're going to check your Experian score, your Equifax score, and your TransUnion score. Each of those are going to be a little bit different because those 3 companies calculate those credit ratings a little bit differently. One's going to look at the amount of credit. One's going to look at the credit history. One's going to look at your payment history. A little bit different than the other. So, for example, Experian. My Experian score might be 827. My Equifax score might be 815, and my TransUnion score might be 808. Right? They might have a 20 to 30 point fluctuation in there. A lot of times they're closer than that, but sometimes you will find that you might have an 827, an 815, and then like a 702. Right? And if TransUnion comes in at 702, you must know that TransUnion probably has some sort of bad information or misled information about you. So you need to contact TransUnion, right? These bureaus are not always correct. They make mistakes. They make data entry mistakes all the time. You have to contact them and ask them why. If you find an error, you can request to have it removed. I've actually done this in the past. I had something that they said you had a late credit card payment within the last 6 months, which I actually did not, because I pay my credit card bills on time in full so that I reap the rewards and not pay any of the disadvantages of credit cards, the penalties. And they said, oops, that's our fault. You did pay that a day before the due date. You're right. We're wrong. We will change it. Okay? So they can make mistakes, but it is kind of a pain in the neck. It took me about 30 days to get it fixed. I had to write them a letter. I couldn't just do it online, but it was a little bit tedious. It was okay. It was worth it because it saved me like a full point on my mortgage interest. Mortgage interest rate. Collection agent is a person or business that collects payments for overdue bills. Let's just say St. James Academy, right? We are the creditor. We'll say Coach Radke owes us $5,000. He graduates from school. He still owes us $5,000. We've called him. We sent him a letter. Whatever. He's not paying. We can potentially sell that $5,000 loan that we hold. We are the creditor. Coach Radke would be the debtor. We can sell that to a collection agency after showing an inability to pay on Coach Radke's part. The collection agency might buy that $5,000 worth of debt for a fraction of the amount. They're obviously not going to buy it for $5,000 to collect $5,000. That's not a very good business practice, right? They're a business, so they might buy it for 50 cents on the dollar. So they might buy $5,000 worth of debt for $2,500, and then go and try to collect $4,000 or $5,000 from Coach Radke, and anything that they collect over $2,500 is going to be their profit, right? That is the main job of their business. St. James Academy, the main job of our school, of our business, is not to collect overdue bills. We're just not good at it. We're not going to put a whole lot of time into that. So we might sell debt to a collection agency who makes that a priority, who makes that a full-time collection process to attempt to collect that. A lot of times you will see this in the medical field. Medical debt is a very real thing. Some people go in without insurance, might go $50,000 in debt. They send it to a collection agency. They might buy it for pennies on the dollar, not 50 cents on the dollar, but pennies on the dollar, and try to collect for 50 cents on the dollar. So there's always a little bit of negotiation that goes on if you ever deal with a collection agency. Pray to God you don't. But if you do, there is some negotiation in there. So you might be able to negotiate them down if you make monthly payments or if you pay a lump sum. If I were going into it and somebody said like, hey, Mr. Concilio, you owe us $2,500, I'd say, well, if I paid you $1,500 right now, today, would you take that? And I think there's probably a really good chance that they would, because that's guaranteed money that they would accept right now, rather than trying to collect payments every single month of $30, $40, $50, $100, right, where something might go wrong. And they might have bought my debt for far less than $1,500. They might have bought it for $500, so they're still profiting by $1,000, even though they're not collecting the full $2,500. So there's always some negotiation that goes in there. Collection agencies cannot use abusive language with you. If they do, please report them to the Better Business Bureau. They cannot discuss your debt with other people. That is confidential information. They cannot lie about who they are and tell you that they are somebody else when they are calling from a collection agency. They can't say that they're from St. James Academy or they're from St. Luke's South or whatever medical facility. They can't tell you that. And they must respect your privacy. So they cannot harass you at work and call you over and over and over until you call them back. They can't call you 900 times throughout a day until you answer the phone. So they have to respect your privacy and identify themselves to the debtors when they do call. A lot of times you will find that small businesses can employ these collection agencies to collect these debts for a small percentage, or even to just claim the entire debt for a certain percentage of that bill per se. Okay, a lot of times, I shouldn't say a lot of times, but some of the times, small businesses, they'll say like, I don't want to send this to collections because I want to keep on doing business with this company. This might be our best company. So they might employ the collection agent to just be a collection agency. They're not necessarily trying to collect a certain amount, but when they do collect any part that they collect, they get maybe up to 10% of the amount that they collect for the employers. They're trying to be cordial, they're trying to be polite, but they're trying to work with these businesses so they can grow and develop these relationships so that they continue to buy products and services over and over from them. Identity theft, when somebody basically steals somebody else's personal financial information. We're talking about social security numbers, credit card numbers, using a credit card that has not been approved for a specific purpose, pretending to be a person to try to get a loan or issue some type of credit under somebody else, under false pretenses. That would be identity theft. If your identity is stolen, please contact the 3 credit bureaus, TransUnion, Experian, and Equifax. Contact your creditors. So anybody that you have an open line of credit with, whether that is a bank, you definitely want to contact your banks, credit unions, your credit card information, your credit card companies. Please call them. A lot of times, especially if your wallet stolen or your purse stolen, you need to call them. They will freeze your credit cards. They will cancel those numbers so that when they go to swipe them, it shows up as a stolen card, and then they will send you, they'll still keep it open, and they will send you a new card with a new number, a new expiration date, a new security code, so on and so forth, so that you can get back to using their cards as soon as possible, because that's how they make money, right? And please, please, please file a police report, because if you file a police report, you contact the creditors, somebody uses your credit card, all of a sudden we can get them on camera, we can get them a place, and we can potentially find the criminal that is trying to issue credit or use the credit that you have under false pretenses. Advice. Personal papers, anything that has your account numbers, personal number or personal name or numbers that are associated with it. Credit card application letters, shred them. I had a friend, Pat. He was living in Lawrence. He was using a local bank there, and he was moving back to Kansas City. He had a box full of checks. He threw the box into the dumpster at his apartment complex in Lawrence. Moved back to Kansas City. And somebody jumped in the dumpster, obviously saw the box of checks in there, jumped in the dumpster, pulled out the checks, wrote bad checks all over the city of Lawrence. His credit was ruined. He ended up having to pay like $3,000 in bad checks because they wrote them all over different grocery stores and convenience stores and all sorts of different places that probably shouldn't have accepted those checks, but they did, and those were bad checks, and they bounced, and they went against him and his social security number. So please, please, please shred all documents and papers just to be sure. Anytime you cancel a credit card, make sure you keep that either email or confirmation that credit card has been canceled with zero balance. Stash that away in a folder. And then cut up your credit card into a million different pieces, shred it up, and then just disregard it, okay? Don't just throw your credit card away. Please, please, please. Be careful when giving out personal information. So there was a lady on Twitter. It was years ago. This sounds really stupid, but she was so excited. She just turned 18. She just got her first credit card, and she took a picture of the front of her credit card, and she posted it on Twitter with a big smiley face and some knucklehead. I mean, you got to kind of give this person a little bit of credit because it was kind of funny, and she's just not very smart, but said, "Hey, what are those numbers on the back?" And she took a picture of the back of the credit card, which has the signature and the security code on there, which is everything that you could possibly need to run her credit card on any online platform that you could think of. She took a picture of the back of her credit card, posted it on Twitter in a reply, and all of a sudden everybody in the universe had access to her credit. Her credit card got maxed out in about 4 seconds, and yeah, really bad idea. She should probably have to pay for that because that's really not very smart. I don't know what happened with her credit card company. But anyway, please, please, please be careful when giving out personal information. Don't give out your Social Security card. Your Social Security number is your business. You don't need to be carrying it on you. You only need it a couple times throughout your life, maybe a few times, maybe when you start a new job, or you're getting your driver's license renewed or something like that. You're getting issued a passport. You might need those, but you don't need to carry your Social Security card on you. So please, please, please don't. Keep that in a safe. Keep that locked up at home in a fireproof safe. You do not need to carry that on you. And especially you should not keep that in your car, because windows can be broken into and cars can be stolen. And you don't want somebody to steal your car, look at your insurance card, know where your home is, have access to your garage door opener, know what your Social Security number is, maybe your license. I mean, that's just a lot of information that somebody could know about you. So please, please, please keep all that information personal and sacred to you. And carry your checkbook, credit cards, ATM cards, Social Security cards only when you use them. Only when you use them. Careful when you're shopping online. I had this really terrible ceiling fan one time. It required this very special light bulb. I checked every place in the city. I wasted too much time. Then I was like, whatever. I'm just going to look online for it. I typed in the number, found this really shady light bulb site, and I was like, this looks like one of my web design kids designed this the first week in HTML, and this isn't very good. But they actually have the bulb that I need. And so I used my card, and I bought like 9 of them, because this was the only place that I could find actually sold these bulbs, and the bulbs actually worked. They were great. But the site had no personal security whatsoever. So somebody actually logged in, and maybe like 30 minutes after I made that transaction, my credit card company called me and said, hey, did you just buy something on lightingsrus.com? And I was like, yeah, I did. I bought some light bulbs. And they said, there was this different charge that showed up from Egypt Air. It was like $9,000. Did you buy 3 round trip flights to Egypt? And I was like, no, I didn't. So, yeah, somebody absolutely stole my credit card information. So then I had to cancel my credit card. They had to reverse the charges. They had to go through the fraud policy. And then they had to send me a new card. And then I had to update all of my online automatic charges with like Netflix and Prime and so on and so forth, which is kind of a pain in the neck. But I did it, and I was thankful that the credit card company issued me a refund for those Egypt Air charges, but it was kind of a pain in the neck. So please, please, please make sure that you are only giving your credit card information to legitimate websites. Always make sure that you review your monthly bank and credit card statements. I ran into this with abcmouse.com. I actually canceled abcmouse.com. I had it for my son, and he kind of outgrew it. It was something that helps him with reading and math and spelling, and it kind of logs in. You log in every day, and you do like 15 minutes, you earn rewards, whatever. When you're parents, you might understand it. But anyway, I canceled it, and then all of a sudden I was reviewing a bank statement for my credit card, and they charged me $89.99, which is ludicrous because I had canceled it before. And I called the people, and they're like, I don't know what to do. I mean, you did it. You never canceled it. And so I had to go back into my email and show them that I canceled it, and I had a confirmation number for me canceling it. They were actually pretty big jerks about it, and I had to jump through a whole bunch of hoops to do that. Actually, they would not end up crediting my credit card about it. They said, well, we'll just give you a credit on abcmouse.com. And I said, well, my son's too old. We don't need this service. Give me back my money, please. This is basically stealing. And they weren't really about that. So I had to call my credit card company, and I had to have them reverse the charges. And we went through a dispute, and I ended up winning, but I got my $90 back, but it was about 30 days later on the next statement. So make sure you're reviewing monthly bank and credit card statements, because there are definitely some people and some companies out there who are not ethically and morally following the right code. So, and there's also places that have different security issues. Consolidation loan and bankruptcy. We're not going to talk too much about consolidation loans, but it basically combines a consumer's debt into one loan with lower payments. A lot of times what you'll see with consolidation loans, as we learned with the first section of credit, they consolidate all these. So they take your home loan, they take your credit card loan, they take your personal loan, they take your car loans, and they put them all together. And then what they end up doing is they spread it out. Instead of you paying that off in the next 10 years, they'll spread it out over 30 years, so they're lower payments, but you end up paying so much more in interest. So you think you're in a better spot, And initially you are, but then over time you end up paying so much more in interest. So please, please, please make sure you understand how time, amount, and rate affect the amount of interest that you are being paid. They should offer you a lower interest rate than your average interest rate over the loans that you're consolidating, but hopefully you just don't have to deal with the consolidation loan. The other one is a bankruptcy. That's a legal process in which a borrower is relieved of his or her debts after showing an inability to pay. Okay, this thing can stay on your credit report for 10 years and it can absolutely wreck your credit report. Your credit score can absolutely be wrecked. You might not be able to buy a house for 7 years. You might not be able to borrow any money for at least 5 years. You might not even be able to apply for a credit card for 3 to 5 years. And then after that, you can't apply for a credit card that issues more than maybe $500. Okay, you can file many times, but eventually people are going to see, and creditors are going to see, like, hey, this person is never going to pay us back. We're not going to borrow them money. And if we do, it's going to be at a super high interest rate. Okay, so please, 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 I know some people have different circumstances. It's not always a choice, but try to avoid bankruptcy at all costs. Try to avoid it. Only buy stuff that you can afford. I understand there are things that happen. There are always things that happen, whether it's medical issues or family issues or loss of job, economy issues, whatever it is, I understand. But try to put yourself in a place. That's why we started out with budgeting. Okay, try to put yourself in a place where you can adapt. Bankruptcy only covers certain things. Okay, so if you leave something out of your bankruptcy petition, by the way, it costs thousands of dollars to file bankruptcy. You have to hire a lawyer. You have court fees, so it might cost $3,000 to $5,000 to $7,000 to file bankruptcy. Some people are technically too poor to actually file for bankruptcy. I know that sounds ridiculous, but some people are still too poor. They don't have, because you have to pay that money up front. You have to pay that money up front. There's no credit being issued. They're not, well, we'll bill you later. No, you have to pay those fees because they know you're filing bankruptcy, so they know you're struggling financially. You have to pay those fees up front in order to actually file bankruptcy. So anything, child support, alimony, fines, and taxes, that's not going to be wiped away. If you don't list something on your bankruptcy petition, so say you don't put your credit card debt on there, it's not going to be wiped away. If you knowingly gave false information, so if you said I made $100,000, but you were really making like $25,000 and you got approved for a BMW, guess what? That's not going to be forgiven. Nope, you lied about that. Student loans, there is nothing that you can do to get rid of a student loan besides pay it off. You have to pay off your student loans. You cannot file bankruptcy and get rid of your student loan. You have to pay your student loans. Very important. Some people don't know. They're like, maybe I'll just claim bankruptcy. I'll go to Notre Dame. I'll rack up $250,000 in debt, and then I'll claim bankruptcy. It'll all go away. Nope, it does not. It does not. It'll wreck your credit score, but it will not wipe away student loans. It will not wipe away your mortgage. So you go buy $1 million house, you claim bankruptcy. Guess what? Most of the time, you're going to have to probably sell your house, right, and pay off your creditor. But it's not just going to wipe away your mortgage. That is not going to happen. There are really two different types of bankruptcy. There's Chapter 7 and there's Chapter 13. So Chapter 7 allows debtors to discharge all or part of their debt. So it relieves either all of your debts that you list on your petition, or it relieves part of those debts, and you might still have to pay off other parts. This is a judge, so this is up to somebody else to determine what your ability to pay is. And then there's also Chapter 13. You see this a lot of times with businesses, more so than individuals. So with Chapter 13 bankruptcy, the debtors repay all or part of their debt based on their payment plan. So they might pay off debt to their vendors, to their suppliers, to their electric companies. They might get a reduced amount, or they might put that onto a payment plan where they spread out the amount that they owe over a longer period of time. Again, they might pay more interest because of that, but also the Chapter 13 can limit the amount of interest that the creditors can charge them. So they're going to end up paying it back. They might end up paying not as much back, or they might end up paying less interest back, but they will probably pay all or at least part of that loan. All right, that is the end of Section 3. So with Section 3, I have it up here somewhere, we have a credit card assignment, and we are going to go on a little shopping spree. Okay, so I've been telling you over and over and over, watch what you spend, this is the budgeting unit, blah, 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 blah. Save some money, invest it, let that money grow, send that money out to grow and convert into other dollars rather than just sending them out to disappear. Okay? Earn interest, don't pay interest. Paying interest makes someone else wealthy. Earning interest can make yourself wealthy. But this time, I'm going to let you guys go out, and I'm going to let you guys go out on a spending spree. Okay, so you guys are going out on a shopping spree. You get to spend between $2,000 and $3,000. Don't spend $1,900. Don't spend $4,000. Spend somewhere between $2,000 and $3,000. All right, so for my spending spree, I went out. I love tropical fish. I've been scuba diving a lot. I want a saltwater fish tank. They're super expensive. I'm going to spend like $500. I'm going to get myself a really nice, like, 55-gallon, 65-gallon saltwater fish tank, $500. I'm going to get a ticket to Augusta National. That's going to be like $1,500. I'm going to go watch some golf. And then I'm going to buy myself, you know what? I'm going to change this because this was from last year. So I'm going to get the TaylorMade twist face driver, and I actually looked it up the other day. It's $450. Ooh, I'm probably not really going to buy it, but yeah, I would like it. That would be awesome. What's that? $29.50 to $24.50. Okay, and then I'm going to go factor my minimum payment. I'm going to factor how long it's going to take me to pay off my debt. So to pay off this stuff, look at this. I go out on a little shopping spree. I spend like $2,450. I'm going to have to pay, okay, $57 a month. That's no big deal. That's easy. But it's going to take me 196 months. My mortgage is only 180 months. I'm on a 15-year mortgage. That's more than 15 years. That's over 16 years. And I'm going to pay more than the actual amount just in interest. Right? So we're going to come over to this calculator. My credit card balance. So let's say I'm $24.50. Average interest rate on my credit card's 18%. So I'm going to leave everything right there. Calculate. My minimum payment's $61.25. So I need to change that. Where did my assignment go? That's not my assignment. Where did my assignment go? What was that? $61. And then how long I take to pay this off? Oh, sorry, $61.25. It's going to take me 202 months. 202 months? Are you kidding me? I don't want to be paying this over 202 months. That's ridiculous. And then the total amount of interest that I will actually pay will be $3,098.13. Oh my gosh. $3,098.13. I don't want to pay that much. Not for $24.50, right? Granted, this is going to be like 18 years later. Okay? So you go on a shopping spree, you pick, it can be one thing, two things, three things, four things, five things. I don't care. Keep it between $2,000 and $3,000 and then make minimum payments on it according to this calculator. Figure out how much you're going to pay in interest and how long that's going to take, factoring your minimum credit card payment, and submit it on Classroom. All right? Time, amount, and rate. 3 things that affect the amount of interest that you are going to pay. See you guys.